G'day Trading Academy members, it's Mitch here. Obviously today, just gonna do a market update and try and get through it as quick as I can, so it's not a hugely long video, but in a bit of a different format. Obviously this week, usually you get the written out version. Weekly, obviously in market updates. For those that don't know, I did re-show kind of the whole service last night and the holistic approach. If you want to go back, watch that YouTube link that'll sit in the live stream channels, but here's where all the market updates go. Obviously, you guys usually get a written out update on stocks, DXY, Bitcoin, alts, Bitcoin dominance, whatever it may be, the flavor of the week with obviously fundamentals. But I thought we'd quickly run over that this week instead by video, just because some people obviously learn a bit better or can take it in a bit better audibly and visibly. So I think it's good to change it up every now and then. Maybe I'll get a bit of feedback on this week's and see if this is what you guys prefer, and we can kind of do both each week. I'm happy to do that. But yeah, the main difference being that we will just film these throughout the day from now on, because obviously a lot of people either don't want to come or can't come at the 7 p.m. time on a Wednesday, despite majority of people kind of voting for that. It's probably a market thing, to be honest. Obviously, the market's pretty stagnant. Not too healthy, I guess, or not too positive for majority of people out there, so they're probably pretty reluctant to come to something like that on a 7 p.m. anyway. But I will just film these throughout the day moving forward, so it's just easy for you guys and it's easy for me. You can watch it whenever you want. I can film it whenever I want, and we don't require that kind of live aspect really late at night when I'm busy, when you guys are busy. So let's get into it. Firstly, I just kind of wanted to look at that. The fear and greed index. I don't know what the hell has happened here. Let me just refresh that for 1 second. But more importantly, what I want to look at is how much fear there is in the market right now. Obviously, last month in January, around the inauguration for Donald Trump, and all the plethora of fundamentals that we had, you can see that there's quite a stark difference. We've almost halved the kind of sentiment. Right now, there is widespread fear in the market versus yesterday, which was neutral. Last week, there was a fair bit of fear as Bitcoin began to dump. There was a lot of macroeconomic headwinds, so on and so forth. But what I wanted to actually look at was I went to the chart, and what I found super interesting was, generically people say you can actually use the fear and greed index just to pick bottoms and tops, right? It's always easier said than done. But if you look at really two kind of good examples of both tops and bottoms, if you guys were here last year, obviously remember the euphoric phase, particularly for altcoins in January, February, and March of 2024. We pretty much had the alt season then that we've had so far in that short little 3-month period. The burst, it was the same as Bitcoin. I think Bitcoin, obviously this was off the back of the ETS, right? So I think Bitcoin went from about 35,000, let's call it 40,000, 38,000 was I think the ETF low from memory, to as high as 70, 73,000. That was our all-time high for a very long time there, until we obviously achieved that after Donald Trump was elected in November of 2024. But a reminder, look at how peak, I think we had, we actually eclipsed that. That was probably around the all-time high, three to 4 weeks, 3 weeks after Donald Trump got elected. But you can see here, obviously, if we're talking about tops and the fear and greed, very similar here around that top where we had, 8-month chop thereafter, or sorry, 5-month chop thereafter. Similar here, and you can see we kind of topped out when when greed was absolutely maximized in the market, and that's a psychological measure you can always use to kind of pick the tops and bottoms. It's always obviously easier said than done in hindsight, because it's kind of hard to pick it here because that can extend for a very long time, very similar to oscillators like RSI and MACD that measure momentum and that type of stuff. But more importantly, what I wanted to kind of take note here was the fear that we're experiencing in the market right now with Bitcoin at $96,000 is that we weren't at these levels. They haven't been since kind of August, October, September last year. Now, for majority of you here, actually, a lot of you joined after that. But I had a very brave thesis when Bitcoin was trading between 50 to 60,000. It had come down a lot. We'd chopped for a long time. Sentiment was, as you can see, at all-time lows because of fear. That we were still obtaining, bullish market structure, and we were actually going to climb out of the range eventually. Obviously, the fundamentals of Trump being elected, so on and so forth, played a large role in me having more conviction in the charts and what I was seeing. But it's pretty wild to see that, as Bitcoin is, a couple of $1,000s off $100,000, that we haven't seen this fear in the market since pre-Trump. I thought I'd make a note of that, alongside some other, fundamental confluence points, such as, ETFs are currently selling. I did show that I don't have Discord open because I didn't want to get notifications, but I did show that the other day how that usually, since their inception, is marked the bottom. You can use a confluence of a couple of things here to kind of just get that. I will show a little bit later. We've had capitulation in miners in particular, and on the hash ribbons indicator that it's indicating fear of greed. Obviously, fear is at its lowest point, or I should say highest point. Fear and greed index, I should say, at its lowest point since October of last year, prior to Trump being elected. Um, so on and so forth. So the sentiment has felt pretty shitty. If you're on crypto Twitter, as I say, it's absolutely chaos in there. If you need to know the reason why, and Bitcoin's at $96,000, it's because 99% of the market aren't in Bitcoin. They're in altcoins. They're in what this service is in. Obviously, hopefully majority of us hold a large amount of Bitcoin outside of this, so we're not feeling the pinch too hard. And we can weather these altcoin downturns a bit better than most of the market, 99% of retail, I would say. Um, and yeah, hopefully it turns soon. I do have large confidence given liquidity thesis, cycle thesis that you guys surely have read on a lot in the research reports, which we'll touch on some of those top indicators soon. It's actually what I'll start off with when we get to BTC. But if you need to go back and read my thesis on the current state of Bitcoin, these type of indicators here, the global liquidity cycle, how that ties into the Bitcoin halvings and the Bitcoin cycles, I then use two very, very stark comparisons with copper gold ratios and how these charts show you when commodities, in particular these ones in comparison, do bottom out and then do peak, so on and so forth. And then obviously very similar to the state of the altcoin market here, Bitcoin dominance, total two altcoins, which you can look a bit at later, and I will show these charts. But let's get started on those charts and let's actually get started on macro. So first and foremost, obviously the DXY, which I'll show you first. You guys should know my DXY thesis by now. I have put it into one of the market updates recently. I've obviously sent it into a few Discord channels, including our very own Discord. But for those that don't kind of understand it, I will explain it now. Now, the reason why I'm high time frame bullish on Bitcoin and in particular crypto is because of the DXY and the inverse relationship we have with that. Now, what is the DXY? I obviously explain this most times, but it's a measurement of the USD, a basket against, it's a basket of major currencies versus the USD, so it's used to kind of measure the weakness or strength of the US dollar. And you can see here, I'll quickly just show you, but it has an inverse relationship with commodities and in particular BTC and even stock markets that, when the DXY rises, usually those financial markets that we're parked in tank. And then when the DXY, dumps is when crypto and commodities goes up. Now, without having to show you the BTC chart, because you should already know this, but when did we top in Bitcoin and the stock markets before our great 2022 crash? It was in November, December of 2021, right? And so you can see when the DXY bottomed out and it began to go on a huge rally, what happened to those markets? Well, Bitcoin was at about 69,000 here. It went to as low as $15,000 here. When did we bottom on Bitcoin? In November of 2022, right? And we did in the stock markets in October, November of 2022. I can quickly show you those if you need, just to explain it a bit better. So here's Bitcoin. When did we top? As I said, we bottomed in the DXY in November of 2021. When did we top? In Bitcoin, November 2021, right? And then I said we topped on the DXY in November of 2022. When did we bottom on Bitcoin? November of 2022, December of 2022, exactly around the exact same time. Stock market's a very similar thing, right? So this bloody up only market, but at one point in time, it did top. Where was it? Oh wow, I've gone way too far back. That was COVID. Here we go. So exact same thing, right? Where did it top? Kind of November, December, January of 2022. Of 2021, 2022. Dumps as the DXY goes. Exactly to that November 2022 point, etc., etc. So you should have a pretty good knowledge base of that now, so you can understand my cycle thesis a bit more, the liquidity thesis and my DXY thesis. But essentially the way I'm seeing the DXY now is pretty much the exact same as 2017, and how I think this cycle, both cyclically, liquidity-wise, and Bitcoin-wise, can be very similar to the 2017 cycle as opposed to the 2021 cycle, despite most cycles having a lot of similarities, and that's because of this chart. Now, if we go back to Trump's first presidency, which he got elected in 2016. Yeah, he did. We had kind of this 2.5 year range of the DXY. Now, as Trump was there was word that Trump was looking likely he was going to get elected, and then did it get elected. What happened was back then is the DXY absolutely rocketed out of the range. It hit its rough 141.4 extension. And then we kind of had this situation where it came back down. There were a lot of kind of tariffs being introduced, or they were being threatened in particular. Very, very similar to right now. We kind of had this top in the DXY shortly after the inauguration, about a couple of weeks after, at that extension, a retest of that range. We kind of pumped into a lower high. And then if you kind of just follow the cyclical pattern of the DXY here, we then started putting in bearish market structure, right? So we had lower high, lower low, 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 right? And so what I'm hoping to see this time around is a very similar situation, both fundamentally, but explanatory via the charts. Because if you look, you've got this 2.5-year range where he wasn't president, kind of leading into that presidency. It's likely he's going to become president. He often talks about how he wants to strengthen the US dollar. He says this, key word, or key sentence, he says this. We come up, we pretty much touch the 141.4 extension. But what actually happens is we top, and this is a couple of weeks after his inauguration or the week of, come back down, test the range, we put in this next lower high. I think this is a bit more easy to see on daily, particularly that bearish market structure that persisted here. I actually drew it out before. You can see the bearish market structure of lower lows, lower highs. And then you get that retest of the range, we pump lower high, and it's just been completely dumping despite, inflationary pressures, which becomes, typically causes quantitative tightening, and tightening monetary policy due to inflationary pressures, which is actually usually what sends the DXY higher. And the reason why this isn't the case is we've got the Triffin dilemma. Now I'm going to get this Word document up just to show you what this is. So what is the Triffin dilemma? The dilemma is this. It's when a country's currency serves as a global reserve currency, i.e. the USD, and two conflicting requirements emerge, right? So the countries must supply enough currency to meet global trade needs. The country must maintain the currency's value and stability. Now, to supply the world with dollars, the US must run persistent trade deficits. However, these same deficits undermine confidence in the dollar's value and stability, and this creates a kind of inherent contradiction, right? So running the deficits provides the global liquidity, but running the deficits also weakens the currency credibility. So this dilemma kind of helps to explain the ongoing tensions that are currently happening in the international monetary system. You're seeing BRICS emerge. You're seeing retaliatory tariffs come in by India, China, whoever it is. Canada, I think, did threaten them and then bowed down pretty quickly. But to understand this further and off the surface level of not just saying, well, inflationary pressures, this means higher US dollar, you actually have to understand exactly what Trump did back then, and you have to understand what his goals and motivations are now. Now, we all know that he wants to fill his own pockets. What's he biggest in? It's real estate, right? And soon to be, or I guess crypto now. And his goal ultimately is to fill his pockets, his family's pockets, his rich friends' pockets. We all know this, right? And that ultimate goal is a lower dollar and cheap borrowing. It's not actually a strengthening USD like he says. That's not good for business for him. And ultimately, his strategy seems to have two main goals. It's to weaken the US dollar to make US exports competitive and reduce trade deficits, and then lower long-term yields. So that's just the interest rates on 10-year Treasury bonds to reduce borrowing costs. Now, why would he want to do this? Because it's important to him, as I said before, because of his real estate motives, which depend on cheap debt. So a few things need to happen to achieve this. So tariffs force foreign economies into currency devaluations. We've seen, I think India had its lowest currency valuation versus the US dollar ever in history. I'm pretty sure that just happened. So when countries like China or Germany see reduced exports due to US tariffs, they usually will have to lower their own interest rates or print money to stimulate their own economies. Now, obviously, China is kind of a big part of my thesis too, in those Eastern European countries and how they can provide, a larger injection into the M2 liquidity cycle to therefore, heighten Bitcoin as well. And what I see is it weakens their currencies relative to the dollar. Now, as these foreign economies weaken, the Federal Reserve will then have to step in with monetary stimulus. This could then involve cutting interest rates of their own, and so on and so forth. So the US also pressures foreign central banks to buy long duration Treasury bonds. So I shouldn't have that thing here. Locking them into US dollar system while anchoring yields lower. So we're actually seeing this in yields now, right? Like not just the DXY, you're seeing these yields come down. So we had a yield topping around a very similar time, around the inauguration. And that's come down here. It's bounced a little now. I think that's obviously due to those inflationary pressures that we're seeing. Um, but this balancing act achieves the kind of the holy grail of fiat alchemy, right? So a weaker dollar and lowering borrowing costs at the same time. So does this cause inflation? As I said before, yes, of course it does. Um, Tariffs and monetary easing ultimately drive inflation, but what you have to understand for us as Bitcoin investors, what is the main selling point of Bitcoin, right? It's that it's a hedge against fiat currencies. That's the number one thing. And the inflation of these currencies is ultimately what destabilizes and devalues them. And if you look at Australia's AUD, I think it's down 94 to 95% since we ever introduced a central bank in the 80s. I think if you look at the Reserve, bank in the Feds in America, ever since they introduced the Feds and a central bank, their currency is down over 99% across the last 100 years. So historically, Bitcoin actually benefits when the dollar weakens because, as I showed you before on the charts, because it's seen as hard money alternative to fiat currencies. This is our main investing thesis, and this is exactly why you're here, investing in both Bitcoin and then obviously beta assets such as altcoins. So as foreign economies struggle under the strain of US tariffs, which are happening now, and currency devaluations occur, the citizens and investors will seek refuge in an asset that can't be printed. So Bitcoin can be traded 24/7 days, 365 days a week if you have internet access and you have direct access to Bitcoin, which is pretty much a majority of the earth, right? As I state here, we're in a game with high stakes: currency, debt, and global power. And now the race is on. You're seeing sovereign nation states come in and threaten to create sovereign wealth funds or strategic reserves to try and accumulate. We saw Abu Dhabi buy 500 million of Bitcoin recently. We've seen Donald Trump, David Sachs, these, Howard Luckner, who hopefully, pushes it forward. They're going to create these reserves. We're seeing over 27 states in the United States pass bills so they can get their own strategic reserves for Bitcoin. It's the exit strategy to escape collapsing fiat systems. There's no other way. There's the stock markets, there's commodities, there's gold. Why do you think that the gold chart looks like this? Why do you think the gold chart over the last, I make a point here, I always have this permanently on my gold chart to remind me of when the gold ETF was introduced by BlackRock and Co. And you can just see the natural progression of gold, and look what's happened in the last couple of years, right? So even at the end of 2023 when Bitcoin was at 20, 30,000, what have they both done? Well, gold has literally gone up, 50%, which is unbelievable for gold. It doesn't sound like much because obviously Bitcoin's gone up 500%, but this is what we're looking for, right? We're looking for we're looking for a safe haven away from fiat currency, and most people will park themselves in gold or Bitcoin or in a commodity of choice, right? Um, so hopefully that explains, a lot more of my kind of DXY thesis, my liquidity thesis a bit more, and how that will tie into Bitcoin halvings, Bitcoin cycles too. Typically, the way Bitcoin has been designed is in these 4-year liquidity cycles is it always thrusts itself the hardest about 12 to 18 months after the halving. It's already done a lot of that already. I think around the halving is around $60,000. It's already gone up to almost 110. It's almost doubled, right? But particularly 12 to 18 months after, that is when global M2 increases, is when these liquidity cycles occur. It's when these same mirrored things happen, like Trump last time happened, and Bitcoin is the main recipient. It is the main beneficiary because of its values, because of this escape of fiat currencies, and how the more and more printing of M2 that happens, the more US dollar that gets printed into the system, means the higher Bitcoin will go over the long run. And that's why, we at Imperial Wealth, we at Mining Store, this is why we believe that cryptocurrencies and Bitcoin will continue to trend up because of this exact thesis, right? So hopefully that reminds everyone kind of that, and visibly and audibly I've explained that a bit better. And why I'm still very high time frame bullish. Just going back to these research reports on Bitcoin. If you read these first three, if you still don't understand, go back and read why my thesis on why I'm still high time frame bullish on Bitcoin for the time being, despite there being such fear in the market, is because of these on-chain metrics and indicators that have proved their worth in the past. Now, the first one is the MRVZ score, used to evaluate whether Bitcoin is overvalued or undervalued. Typically, a score of 6 to 7 considers it overvalued. So literally it's picked the top in every price cycle. Right now it sits at 2.41, so we're 30% of the way there. You can see it picked the 2021, 2017, and 2013 cycles. Every 4 years, of course, I expect, sometime in October, November of 2025, if we do get that liquidity thrust, if everything does come into play, everything happens as planned, like prior cycles, or the way I see it, I do expect this value up there to be in the 6 to 7 range. I might begin to de-risk a lot of my altcoins, de-risk a lot of my Bitcoin, and kind of plan for, that next cycle crash, which, a lot of people are expecting. I've been calling to happen for years, but it should be happening at the end of 2025 into 2026. Now, whether Bitcoin is affected by that due to the macroeconomic factors I'm talking about, it remains to be seen, but I still think it will be. But we can argue about that another day. If sovereign wealth states are accumulating it, if Michael Saylor still buying billion, if BlackRock, blah blah. I get it, but let's stick to the facts. Let's stick to history right now. Because often it rhymes, yeah? Pi cycle, very similar. It's when these two SMAs, I won't go into detail, you can read the research report on what all of these are, exactly what they are, and the data and metrics behind them. But, those are converging, and I expect those to converge towards the end of this year or in 2026, where you'll get a time where they cross, and it's picked every, 2013, 2014, 2017, 2021, I expect 2025, 2026, that same thing to occur. Pure multiple, another one. If you need to go and read about it, this is to do with mining, mining profitability, which is obviously very important to the economics of Bitcoin. Once again, there's a range where this hits up. You can see it in 2013, you see it in 2017, just touches it in 2021. And so this is very low. This is 0.97. It's nowhere near. It's not near that kind of I don't actually remember off by heart the number, but typically above 4. So, not even 25% of the way there, right, for miners. So, typically, that's why I'm high time frame bullish. That liquidity thesis, the cycle and halving thesis, tied in with these Bitcoin on-chain metrics that are explained all the way throughout. I talk about liquidity a lot more closely here, particularly at the time of when this was posted, and my outlook there, how this relates to them. These cycles, you can see how it works, these liquidity cycles, through the Bitcoin chart itself, cyclically via the halvings. So, and obviously we have these gold and copper charts that I've shown. So I still think there's a long way to go for Bitcoin, and as a result, I do think that's the case for altcoins, which we'll touch on a bit later, but I thought I'd show, visibly and audibly those top 3 indicators again, before we get into, just looking at the Bitcoin chart itself. So moving on to the Bitcoin chart itself, there hasn't been any break in market structure, no matter how well you look at this from cycle bottom. If you want to even just look at this on a monthly or whatever, so obviously we put in an eventual higher low here, higher high, higher high, higher low, higher high. Maybe we're just forming this higher low in this period here before we put in that next higher high, right? And so until price really, that's on the monthly. We can obviously look at it a bit more strictly on the weekly and the daily. But, if price was to, kind of eventually break below, probably prior at, which is this 75k line here or so, that's when you can probably become, maybe it will be over or you need to readjust your plan. But, we're not breaking any of this structure here. We're still holding weekly market structure, we're holding daily market structure, we're holding monthly market structure. Market structure was my thesis coming out of into the Trump inauguration, if you remember, for those that were here, and it worked insanely well, didn't it? It's almost like we just predicted every move, every higher low, every higher high. And people do forget that we are still in a bullish market structure for Bitcoin. And that's why I'm still very confident. There's a certain number of things that are happening. If we even go to kind of our oscillators here, one I did mention in the Discord the other day is the hash ribbons. Now we did get a little bit of capitulation kind of signal here, which usually signals that we're close to a bottom. So one that was a high confluence point of mine when we're coming into that bullish market structure was we got that really short capitulation signal here when we put in that high low to escape that bearish, midterm bearish market structure that we were experiencing in the range of 2024. And we got that short capitulation indicator, which led to a buy signal, and the rest is history, right? We then pumped from 58k to 100k plus, almost doubling Bitcoin's price. Now, who's to say that can't happen again? We've just got this short-term capitulation indicator indicating that miners are kind of capitulating now on this weakened Bitcoin price, heightened energy costs, whatever, or heightened machinery costs given the price of Bitcoin right now. And who's to say we can't get a quickly buy signal here before we're on our merry way, which fits in with the other confluence points. Of course, we're not going to use that just by itself, but that's there as well. So Going to, and I will quickly show these ones because I do think these indicators are important as well to show our momentum. But we're seeing a pretty heavy downtrend in Bitcoin on the RSI. Whether that comes right into this kind of support area here, a bit lower, maybe we get a wick into these range lows, and that puts us there, or even that 85k wick, which I hope we don't have any of these wicks, but just being aware before we see a huge reversal in RSI. Now, it obviously doesn't have to always reach this level. You can see it reach here before we went on a rally from 56 to as high as 72. But it could be that we come into here before we break this downtrend and then get into very large oversold areas once again. And then MACD, it's looking like it's pretty close to putting in a bullish cross soon enough. Ever since the week after the inauguration, where it was a huge sell the news event on Trump, there was obviously a lot of disappointment, I think, from low time frame traders, I should say, betting on that crypto strategic reserve, or Bitcoin strategic reserve, being signed on the first day or two. It's not. These things take time. And they would have sold out a lot, and there would have been a lot of distribution of wealth in this range, just like there was in the last range, right? A lot of people paper handed their Bitcoin because of X, Y, and Z, selling it to people like Larry Fink, BlackRock, whoever it may be. Michael Saylor's obviously just raised another 2 billion convertible note at 0% this morning to buy another 2 billion in Bitcoin. That's the people that are accumulating and accumulating. They don't care, and it might be as a result that we see price go up pretty soon, given that the momentum of price is stalled. Come in here, get that. We get a bullish cross on MACD, maybe a buy signal on the hash ribbons, and a bunch of confluence of indicators, and then price is on its merry way, and we continue that bullish market structure and our bullishness for 2025. Going a bit more locally now. Sorry, let me just get rid of those. We can look at the local range too. So I'll show, let me just get rid of this brushes. Let's just look at the GP support here, because it's pretty funny, right? Like, think about this, and it's a very clean downtrend here. Obviously, you can see with 1, 2, 3, almost 4, 5, 6, 7 wicks, and maybe this is the explosion we require, or maybe this is either going to go two ways, right? We're going to continue the downtrend. We're going to wipe out these range lows and bounce, or we might even come in a wick 85k, or we go down and we retest 75k, right? So there are three paths from here. Which one do I think is likely to happen? One or two, obviously. I'd obviously prefer path one to happen, but it's really funny to note that there's such fear in the market for Bitcoin, and it's had about 12 to 14 days, I think we looked at, and adding today's 15 days, where it's literally just sat at high time frame support, which if you get that last daily candle low in this range, and you draw your Fibonacci up to here, you then derive the golden pocket at pretty much the 94 to 93 to 95k level, and price has not had a single daily candle closure below this level, right? It's literally just wicked into it 14 times, whatever it is, and it's just holding, and it's incredible to see the absolute fear in the market that I showed at the start of the live stream, right? And this is a very clear high time frame level. Look how many times we've wicked into this, and I'll show this on the next, that usual local chart we've kind of been looking at, which is this one here, where you've got I've pretty much just drawn a range volume profile for this range, provided it's given the value area high, the point of control, and value area low, and that's pretty much our three levels, right? So I don't really need to signify that's the December low anymore, but we've pretty much got this high time frame level of support where, as this entered in on this wick last time, we bought Tau at $280, we bought Ondo around $1, these are all up heaps right now, obviously, and hopefully some of you that required more accumulation and dollar cost averaging of other tokens were able to buy your own in this level and see huge upside gains already. But really, every time we wick into this value area low, we're seeing huge bounces, because it represents the 786 pivot from that range low to range high. It represents the value area low. We've got our weekly candle low that was swept there. That now kind of becomes this one, I should say. Just get a magnet on that so it's a bit more accurate. Which is that 89k level. So we pretty much only wicked below, I think this candle here, I pointed at the screen with my hand then. This candle here, that was only an hour, maybe less. So we haven't since, the start of November spent more than an hour below $90,000, and the market is turning itself over like the apocalypse has hit, right? That's why it's usually my buy area. When I say, if I see price wick into this area, alts get absolutely washed, everyone gets liquidated, all the people that don't know risk management and continue to chase altcoins with leverage get wiped. Us on spot, we pick up the spot prices a lot cheaper. So I did mention today that I'm interested in buys, adding to some high conviction buys, particularly on the next leg down. If we do get it into this area and I see strength once again, it's foolproof at the moment. If we do see lower, say that wick into that 85 daily candle low, then I'll trade that and I'll invest accordingly there if we see strength. You don't know what's going to happen with price. I had questions about FTX, and there's a couple of billion getting injected back to them via Bitfinex, or sorry, by Kraken and a few other exchanges today. And look, that's awesome, but I can't tell the future. I don't know if these people are going to put money back into the market. A lot of them probably thought the money was gone, so they're probably happy to, but a lot of them are probably just like, stuff this industry. I'm not putting my money back somewhere where I might lose it again. I can buy a car with it. I can buy a house. I can do other great things, and they've probably hated crypto ever since. So who knows, right? But there's still some of it's going to go back in, hopefully to altcoins. But in any case, I don't know what price is going to do. This is why we use technical analysis on at least definitely higher time frames to get a visible idea of where price is going. So those bullish market structure, given that hasn't broken yet, that gives me confidence that we're still going to see higher. Those on-chain metrics I saw before. I never know where price is going to go, but I can watch what price is going to do, plan ahead using these areas, using these resistance areas. Now, this point of control is a hugely important one. Why? Well, I've denoted it with this red box because you can see that majority of the volume versus the rest of this kind of range falls between the 98 to 95,000 level, right? And every time we're trying to reclaim that level, there's so much volume coming in and selling that we can't reclaim it, right? 1 wick, 2 wick, 3 wick, 4 wick. Or we did close the daily candle above it and then immediately lost it. Retested it, perfectly closed below once again, and now we've seen that downtrend. So my strength and the strength of the market and my version of seeing strength in the market, as you guys have seen over and over in the Discord and in the market update, is getting a reclaim of this level and then seeing higher to the value area high, which you can see is a hugely important resistance level too, and then all-time highs. So hopefully that makes sense. Now, and hopefully for those that didn't understand the range profile, understand that a bit more. And that's exactly what I'm looking at, right? So I'm hopefully explaining that correctly, but that's what I'm using as my basis of my trading and investing, both on the support side, the resistance sides, and going from there. I don't know what price is going to do, but we can plan ahead using these levels, using different indicators, and forming theses, right? So we'll just show kind of a little more here. This 105k resistance, that was obviously something we looked at. We did have this ascending parallel structure that I slightly shifted and it did look slightly different, but I do want to show this because if we go from that higher low that we put in that formed majority of our thesis to see us climb out of that prior range, you can see that we're kind of holding that 786 that's the same from pulling our fib from here to here. If we pull our fib from that first high low to our current all-time high, it also represents the pivot 382, which is hugely important in different Elliott wave counts that I'm not going to get too much into. But that itself is a very, very strong support level to me as a major 382, given those particular two pivots. But this parallel channel is also pretty clean. We wicked right into it, so I'm guessing, I didn't have it drawn, but it would have been nice to have had this drawn prior. Just drawing it on those three wicks there, going, okay, well, if I draw that to 58k and you're watching price then come down, 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 okay, I expect pretty strong support here. So that's how you use parallel channels, of course, too. And for those that are a bit behind on me talking about Fibonacci's in the market updates, or parallel channels, or Elliott wave, or harmonics, or bullish market structure, DXY, other charts, this is all explained in my advanced trading course. So if that's something you want to learn and you want to become very efficient at and begin to apply it yourself, that's where you learn it. And I'm sure a lot of the people in the trading academy that do that can vouch for it as well. In any case, I did just want to show you this, so you can continue, if this is a legitimate parallel channel that price does want to follow, maybe you can begin to map out, this is just an example, but, drawing from our pivot low to pivot high, and then figuring out, different, that's going to be way too high, sorry. This is just an example, but if I was to pull that across a bit wider there, and it might be that you're targeting the 2414 extension of this parallel channel eventually to see price come there. so on and so forth. But thought I'd just quickly show that for those that were interested. Next, I do want to just show locally how there's a lot of similarities in this range, despite it being a lot shorter. You know, it's been 4 months now, so it's been pretty long on the 2024 range. And you saw me bang on about this a lot in the prior high time frame range. But what you're seeing here, once again, is this kind of delta neutral strategy that I can tell that a lot of high time frame traders are taking. And what does this mean is that the CVD is indicating to me that there's aggressive selling and shorting in this market within this range. Even down here where price is kind of, let's just take it from this point here, right? And what would you say about price here? Well, you'd say price is holding, right? Like, yes, it's downtrending down, but we're kind of holding this line here. Now, what is, oh shit, I can't delete that. Oh, yes, I can. And what's happening with CVD? Well, CVD is indicating that there's aggressive selling or aggressive shorting coming into the market because it's lowering. What is open interest doing at the same time? It's heading upwards a lot. So if there's aggressive selling yet open interest is increasing, what does this indicate to me? That a lot of people are shorting in this area, and a lot of people are either hedging or they're just simply shorting because they're bearish on macroeconomics or the inflationary data that came in or so on and so forth, which presents the notion that we can squeeze quite high. So it gives me a bit of confluence no matter if it's with the hash ribbons indicator, those oscillators such as RSI, MACD, liquidity, whatever it is, that this can form a bit more of a thesis here, at least on lower time frames or within this range where I can indicate, okay, well, a lot of people are short here. There's a lot of liquidity above us, and that can help us make several pushes upwards or generally present a large short squeeze. So I think that's enough on Bitcoin for now. Obviously, there's a lot to kind of digest there with the DXY, yields, the trilemma, Bitcoin itself, but hopefully showing that a bit audibly and visibly helps you guys understand what I'm explaining in those market updates or in the Bitcoin updates or even in the Discord. So what I'll do quickly now, just to end off the stream, because I don't want to go for too long. We've almost been going for 40 minutes now. I'm unsure if people in this day and age have attention spans that go that long, but we will just look at Bitcoin dominance because Bitcoin dominance is of huge interest to everyone at all times, not just now, but I will get it on the weekly because it really reached an integral spot where obviously for those that listened to my speech last night or in Brisbane, such as David Hardy, thank you David, is that this has been in a bullish market structure very different to Bitcoin, right? High, 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 low, high, 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 low, high, 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 low. High, 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 low, high, 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 low, high, high. And so, either it's going to make a high, low around here or around here, wherever it is, and then it's going to make another high, high, or we're going to see a complete breakdown at this major GP. It comes from this high in 2021 to this 2022 low. That was obviously the bull market, altcoin bull market that ensued in here. And obviously what us altcoin traders want to see happen is something like this, right, where I'm going to shorten this, it's not going to get to 28%, but something like this happens where, throughout 2025, we see this huge altcoin flourish. Now, where's that going to come from? Obviously, ETH-BTC and ETH really needs to pick up because ETH is the largest market capitalization alt by far. But the reason why, and if you got to watch I'm not going to go on too much about this now, but it's why it's so important to have outperformers, Tau, Hype, and Sonic are 3 that I mentioned today. Obviously, Chainlink and Ondo's RWAs I spoke about last night too. Certain ones that you should go back and watch that speech on last night, because if this continues upward in bullish market structure, then there's only going to be pockets of outperformance in altcoins. There's not going to be like here where every single altcoin just went up 10 to 50x like it did in prior cycles that we got very easily. So my interest in Bitcoin dominance comes now to see whether this major golden pocket is flipped to support, and we flip this high that we had on that mini alt run towards the end of last year, or whether this is actually just completely lost and we see ETH begin to outperform. We see all these larger cap alts like Solana, XRP, BNB, whatever it is, really turn it up with that liquidity thrust and all these other different things. And then we see Bitcoin dominance come down to a lower level that we saw in the mid-cycle before it then probably continues up as everyone begins to dump their alts. Maybe macroeconomics comes in to play. Even if Bitcoin dumps, these alts will dump 10 times as hard, or Sovereign Nation Wealth Fund gets approved, so on and so forth. So a lot of what you're investing comes in is actually dependent on this chart largely, but a lot of the importance of high conviction allocation, capital efficiency comes in this chart too, because if it continues up, you don't want to be in 50 alts, you don't want to be in 30, you want to be in pockets of outperformers, such as those ones that I've explained thoroughly in coin updates and in my speech last night, and you want to be with outperformers, right? quickly show some other altcoin charts that may be of interest. Well, this is just the total chart, so it includes Bitcoin. I just want to kind of show or explain, visually, you'd expect that this cycle, and it's funny, the greed that we're seeing, sorry, the fear that we're seeing in this market, right, even amongst total crypto just in general, is we're currently just holding the 2021 very technically as support, and we only have eclipsed 2021 now. I think this industry has made several strides. It's a lot bigger than the last cycle. I don't know about you guys. So I would expect, it to outperform last cycle a fair bit as it's an emerging technology and we're still only, 15 to 17 years old. And I expect this to go much higher, right? Not just sit at 3 trillion of what we eclipsed last cycle. So I did want to show that now. One thing that only does worry me is if you're an Elliott wave counter, and you've got, your 5 wave, your A, B, C, so, kind of like 1, 2, 3, 4, 5, A, B, C, well, C, 1, 2, 3, 4, 5, and like we obviously don't want an A, B, C correction or something like this to then occur and the cycle top to be in and price comes down, maybe it's not till there, but like to 1.5 trillion or whatever it is, right? We want kind of wave 5 to be a fair bit more extended, but I'm not going to get into Elliott wave theory right now, but thought I'd make that known to those that do have interest in it. Total 2, so this obviously excludes Bitcoin, it includes Ethereum. I just want to visibly show once again this is pretty much down 600 billion from last cycle, even with Bitcoin at $96,000, just to show the underperformance of alts in general, or really ETH. But how, if you go back and read my research reports on altcoins, I talk about this a lot, and I show it in the state of Bitcoin dominance, and how we're getting these lineups. This is a hugely important research report, and a lot of my theory that we get is that they're lining up like prior cycles. Everyone's freaking out, but this happened in every other cycle, and you shouldn't freak out. Until history says otherwise, right? We still have a few months ahead of us for this to play out, but I do expect. This is exactly why I kind of did expect February and March to pick up in particular, but do not panic yet until we see this, not playing out, or metrics, breaking down, or even just bullish market structure, those things I spoke about before. There's no need to panic. You just need to be a bit more patient. I talk about the confluence of, Bitcoin total to these multiple. I speak about and I tie everything together in these research reports. The look ahead, sustained liquidity. So it's so important that you go and read this research report, including the Bitcoin one, so you understand everything in writing that I'm explaining. But I obviously can't go through everything perfectly right now, but so you have a very thorough understanding of your own investments, where they're sitting, why they're sitting where they are, and what you can look forward to ahead. Or else you're probably going to sit there pretty upset watching price day to day, right, without understanding the bigger picture. So it's same thing on total 2. So total 3, which then excludes ETH, which is pretty technical right now. So I think I showed this in a coin update recently, but from that kind of pullback that we had in mid 2021, then the total altcoins went on to rally, almost another 3x, right? Yeah, close to 3x. So we made that exact pullback here, and it's like saying like we can't do that again. Well, why can't we? Another 188% puts us at a 2.5 trillion, a total 3 market cap, excluding Bitcoin and ETH. And we're currently only at 800 billion now. I'm not going to say we're going to triple it again. It's just something to be aware of. It wasn't over here mid-cycle, and it might not be over here mid-cycle or 3/4 of the way through the cycle. So just something to take note of. But yeah, this is really the gist of Bitcoin dominance, total 2, total 3, and going to these charts, these research reports, understanding how I tie it in. I think I showed it here. I even showed it with total market cap, right? And I show several different examples of comparing the history why it's almost more risky to not de-risk, because you could miss out on this upside potential any moment, right? And I show how the cycles occur. It's all very cyclical, all based on liquidity, all based on tying several different charts together, so on and so forth. I was planning to show a couple of altcoin charts such as Sonic, Hype. Sorry, I've got my important charts gone. Sonic looks awesome. Oh, look at on the weekly here. Its ecosystem is exploding. Meme coins are exploding. Dexes are. The guys in the DeFi channels are printing. I've been printing on, providing liquidity for THC and S on Shadow. I've been earning Shadow tokens. Equalizer has had a 100% pump today. I know it's down a fair bit, but hopefully we see this ecosystem really pick up, and I think the market is really waking up to the best technology on the market. If you're on CT, you have to have seen the market reacting to this, seeing heaps of funds breach from Solana, which is a bit worrying for us Solana holders too, but from Ethereum, Layer 2s to Sonic, because they're understanding that this is the best technology on the market. Similar to Hyper EVM, and Hype itself, we're seeing a huge sell the news event. If you want to liken that to the Sonic one, which was almost felt unfair, seeing this, but I think as the market matures and things start to stabilize, or if Bitcoin pumps a bit, Hyperliquid is still $23. That's still almost, a 2.5x for us that bought around 9 here. Oh, sorry, down here. Oh, even lower. Oh, sorry, this is just a Bybit chart, so it doesn't even have it at $9. But, obviously we're investing in this at $9, so there's no need to panic. If it does drop lower, I'm going to be investing more in it because there's no other business that's better out there than Hyperliquid with its perpetual futures, and now it's layer 1 technology, which we can go over more in a new update. And then Dynamic Tau, obviously this is my biggest kind of AI play at the moment besides Fetch. And you're obviously seeing Hey Anon, seeing that DEFAI kind of come down, but that's fine. I'm not panicking here on AI. I think it's going to be the biggest thing of 2025 and 2026. So essentially, we're just getting this cheaper now. We bought it on this wick the other day at 280. I'll be looking to maybe even accumulate some more in the coming days if we get that BTC wick down, but not to panic. If you need to accumulate more dollar cost average, you're getting it at a perfect price now. I expect Tau to exceed its all-time high of 750. I expect Tau to be $2,000, $3,000 hopefully in an alt run where that liquidity thrust comes in. But I think that's it for today. I know I speak at 1,000 miles per hour. Can you imagine what would happen if I spoke slowly? It'd probably be a 3-hour video. But hopefully to those that do watch this or get the chance to watch this, you learn something, whether that be about the tariff dilemma, the DXY yields, Bitcoin, those on-chain indicators, total charts, whatever it is. As I said, please, 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 you're doing yourself a disservice if you don't go and read this, and this. Don't worry too much about Trump. I just did a research report explaining what the hell was going on then. But if you don't read these research reports to understand why you're in this game, how to approach this game, then you're doing yourself a disservice, and you're not going to make as much money as what you should otherwise, or you're going to have a very unhappy time riding the highs and lows of this cycle. So thank you very much. Hopefully, if there's good feedback on these, we can do this a bit more often. This was obviously more of a general overview one, encompassing everything. But if I just do it on, say, a market update, and I release a written one and a video version, and you guys can choose which one to watch or read and then watch it, that works as well. So yeah, that'll be it for today. Thanks everyone. I'll post this in the Discord. I can post this one online as well, and we'll be speaking in the Discord itself. So cheers, have a good day, and the rest of the week.